A strong start to second quarter earnings season and solid economic data. Well, that has a number of economists pushing back their warnings of a looming recession. Josh Schafer is here with a closer look. And Josh, this recession prediction that we've heard so many economists warn us about now for quite some time hasn't exactly come to fruition yet.
No, Sean, it keeps getting pushed back, right? We were talking about the 2023 recession. Now we're talking about the 2024 recession, or are we even going to get a recession, right? And so Goldman pushed back their likelihood of a recession earlier this week. They had been at 25%. They had been up above 30% earlier this year. They're now saying in the next 12 months, there is a 20% chance that we will see a recession this year. And I was on with a media roundtable earlier this week with their chief economist, Jan Hatzius, and I thought one phrase he kept coming back to was interesting. He kept calling it unspectacular growth, meaning we're not going to see anything that's going to be eye-popping. We're not talking about crazy economic expansion necessarily right now, but unspectacular growth, and that's just fine when we think about in terms of a recession, right? Retail sales this week, up 0.2%. Growth, right? It's just growth.
I was going to ask you about that because it's like, we write the story, okay, retail sales up 0.2%, it misses expectations, and of course, predictably, all the notes come in, here it is, this is softness. But annualize the last 3 months of sales, we're still seeing sales higher, and we're still seeing this number in particular, because we're going to do a retail sales segment here, but impacted by a negative read at gas stations. So it is actually a little bit stronger than that headline suggests. And if a little bit stronger than the headline isn't the story for the U.S. economy right now, then I don't know what a better one would be.
And a lot of people are pointing to that control group number too, right? Because that's what actually is put into the GDP number that we end up coming out with, and the control group is up 0.6%. So when you look at it that way, you're seeing some consumption happening, and that's something that a lot of economists just end up coming back to in terms of this consumer story we're talking about. That's what everyone is stuck up on right now is, well, if the consumer's resilient, then that's probably just fine. Right now, you're looking at real disposable income, so how we are sort of able to pay for things, right? And if income's still rising, and it wasn't last year, that's a pretty good indicator.
Well, and I think because some nominal income has been flattish, let's say roughly, but now inflation is coming down, so now real inflation-adjusted income is all of a sudden starting to look a lot better. And I think it gets to the conversation we were just having with our prior guests about, well, the Fed doesn't really feel like it needs to do a lot different because all of a sudden people are like, they're not making more, but quote unquote, they're making more because you are having fewer inflationary pressures on whatever your take home is.
And you have inflation coming down pretty significantly too, right? There's a lot of talk about inflation being up, but the economists that are in this camp of saying, we're probably not going to get a recession, they're saying, well, you had inflation at 9% last year headline, now you're at 3%. Yeah. At some point, how fast can it come down? It's coming down, just wait.
All right, well, we'll wait to see what we hear from Powell next week. But I think still, what are the odds of a hike? Is it still 98%?
It's well over 90%.
Well above 90%.
I saw 99.8, I think.
99.8%. All right, well, we'll see. Maybe
no drama.
Something that he says in the conference will catch markets off guard. All right, Josh, thanks.